Hello viewers, welcome to my channel. I'm Hashim Ali Khan. Already 14 problems I have completed in the previous videos on lease accounting. This is the last and final video on the problems of lease accounting. So 15, 16, 17, three more problems I have decided to give you in this video, and that will be the end of the topic lease accounting. So after watching so many videos, so many problems, I think you got a good command on the topic of lease accounting. So if you join in the middle, you may not be able to understand. So if you have not watched earlier videos, I suggest you to go to the playlist of my channel. Select the subject Advanced Corporate Accounting. Select the topic Lease Accounting. Watch the first video, then successively if you watch the other videos, definitely you will get the good command. You will get confidence on this topic of lease accounting. Now I am going to start the 15th problem. So before starting the 15th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So 15th problem I am reading out, see carefully. This is regarding evaluation of lease proposals. So 15th, Rasi Limited has decided to purchase an equipment whose cost is rupees 20 lakh. The sales tax of 4% is payable thereon. So 20 lakh rupees is the cost of the equipment and 4% sales tax has to be paid. So sales tax will be added to the cost. The life of the equipment is 5 years, at the end of which it can be sold for rupees 5 lakh. Scrap value, residual value is 5 lakh rupees. The company received an offer from Messrs Bajaj Leasing Company to provide the equipment in lease, the terms of which are as under. That means the company, the Rasi Limited, has two options. They can buy the equipment or they can lease it from the lessor. The lessor is Bajaj Leasing Limited. The lessor is ready to provide this asset on lease. What are the terms of the lease? Lease period 5 years. Management charges 2% of investment. Annual rental 147 by 1000. That means for every 1000 rupees of asset value, 147 is the lease rental. But our cost is not 1000. Our cost is 20 lakh plus 4%. 20 lakh plus 4%, that is the cost. We have to calculate what is the annual lease rental. Lease rentals are payable annually in arrears. Arrears means end of the year. But management fee is payable immediately on signing the lease. The lease rentals are also subject to sales tax of 4%. The depreciation is calculated at 25% on written down value method, and the company's required rate of return is 16%. That means the future cash inflows will be discounted to find out the present value at a discount rate of 16%. Evaluate the proposal from the lessee's point of view. Assume tax rate is 50%. We have to evaluate from lessee point of view, Rasi Limited, whether Rasi Limited should buy the equipment or should take the equipment on lease. So I told you in the previous problems also, in this type of problem we have to compare what is the PV, present value of cash outflow in buying option, and what is the present value of equipment, present value of cash outflow in leasing option. So both the options we compare. So wherever we are having less present value of cash outflow, that option we select. So first of all, buying option. If we buy the asset, according to Income Tax Act, depreciation is available to the owner, buyer. So here if we buy the asset, we'll get the depreciation. When we get the depreciation, then we'll get the tax shield. That means depreciation is allowed. Depreciation is allowed as a deduction for computing taxable income. So we are benefiting from tax. Now see here, how to find out the PV of cash outflow in buying option. So Rasi Limited PV of cash outflow in buying option. What is the cost of the equipment? 20 lakh given in the problem. And sales tax 4%. So 4% of 20 lakh comes to 80,000. So 20 lakh 80,000 is the cost of the asset. This is the 20 lakh 80,000. But we are getting the benefit of depreciation. So we find out what is the present value of depreciation tax shield. Depreciation tax shield. So every year we can allow depreciation. Depreciation will be debited to profit and loss account. The profit will come down. So tax liability will also come down. So we are saving the tax. we are saving the tax liability on account of this asset. So that is a benefit. So deduct. Minus present value of tax benefit on depreciation. This we will calculate in working note. How much is the PV of tax benefit? PV of tax benefit on depreciation. That will calculate in working note. We are going to get 5,62,520. How? I'll show it. After deducting 15,17,480. Now present value of residual value. At the end of 5 years, there is a scrap value of the machine of 5 lakh rupees. That means if the company sells the asset after 5 years, it can fetch rupees 5 lakh. The present value of that 5 lakh. PV of residual value at the end of 5th year. So 5 lakh into PV factor. PV factor at the rate of 16% against 5 years. So refer the table, refer the PV table against 5th year. Against 5th year under 16% column, you will get 0.4761. If you don't have, you can use the simple calculator. Simple calculator. In simple calculator, at 16% means 1 divided by 1.16. 1 divided by 1.16 is equal to, then you will get first year, is equal to second year, is equal to third year, is equal to fourth year, is equal to fifth year. The fifth year you find out what is the factor, you are going to get 0.4761. This is the PV factor at the end of 5th year at 16% rate. Multiply 2,38,050, deduct the 12,79,430. This is the present value of cash outflow in buying option. In buying option, right? Now, how to calculate tax benefit on depreciation? It is given in the problem. Depreciation is provided on written down value method, WDV method. So here year 1, 2, 3, 4, 5, WDV at the beginning of the year. What is the cost of the machine? 20,80,000. Don't say only 20 lakh because sales tax is also a part of the cost. Sales tax paid is also a part of the cost. Depreciation is allowed. So 20,80,000 is the WDV at the beginning of first year. So what is the rate of depreciation? 25%. 25%. So 25% of 20,80,000 you are going to get 5,20,000. Now what is the WDV at the beginning of second year? 20,80,000 minus 5,20,000. Minus 5,20,000. You are going to get 15,60,000. This is the WDV at the beginning of second year. Again calculate 25% of 15,60,000. You are going to get 3,90,000. So 3,90,000 is the depreciation for second year. Now deduct 15,60,000 minus 3,90,000. You will get WDV for third year, 11,70,000. 11,70,000 is the WDV at the beginning of third year. Calculate 25% of 11,70,000. 2,92,500 is the depreciation for third year. Now deduct 11,70,000 minus 2,92,500. You are going to get 8,77,500. This is the WDV at the beginning of fourth year. Again 25% of this amount. You are going to get 2,19,375. Depreciation for fourth year. Deduct this amount from this. You will get 6,58,124. 25% of this, 1,64,531. This is the annual depreciation. First year, second year, third year. At 25% on WDV. Now, tax benefit on depreciation. It is given in the problem that rate of tax is 50%. So whatever depreciation we are getting, 50% will get the tax benefit. 50% of depreciation. So depreciation how much here? 5,20,000. So 50% of 5,20,000, 2,60,000. 50% of 3,90,000, 195. 50% of 2,92,500, 146,250. 50% of 2,19,375, 109,688. So 50% of this depreciation we have calculated tax benefit. Now we want the present value. This tax benefit we are going to get at the end of first year, at the end of second year, at the end of third year. But we want the present value. So we have to multiply with the present value factors. The present value factors at 16%. So refer the table, or else you use the calculator. 1 divided by 1.16. 1 divided by 1.16 because 16% is the rate. 1 divided by 1.16 is equal to, you are going to get 0.68621 is equal to, again press you will get 0.7432, again is equal to 0.6407, again is equal to. So these are the PV factors. Multiply tax benefit with PV factor. 2,60,000 into 0.8621, you will get 2,24,146. 1,95,000 into 0.7432, 144. Multiply and add up. 5,62,520 is the present value of tax benefit, and this will be deducted from the cost. That's all. So this is the complete explanation about PV of cash outflow in buying option. Now I am coming to the next option, leasing option. Present value of cash outflow in leasing option. See carefully. Lease management fee, it is given in the problem. The lessor is charging 2% on cost as lease management fee on signing the agreement. So what is the cost of the equipment? 20,80,000. So 2% of 20,80,000, 41,600. This is the amount payable to the lessor at the time of signing the agreement. But according to Income Tax Act, lease management fees payable is allowed as deduction in computing the taxable income. So it is allowed as deduction. So we are getting tax benefit on lease management fee. What is the tax benefit? 50%. So tax saving on lease management fee, 50% of 41,600, 20,800, we are getting the tax benefit on lease management fee. So net lease management fee payable at the time of signing the agreement is 20,800. Subtract 41,600 minus 20,800. So you are getting 20,800 is the net lease management fee payable. Net lease management fee payable at the time of signing the agreement. Now annual lease rental. For every 1,000 value of asset, lease rental 147. Just now I explained you while reading the problem. For every 1,000 rupees value of asset, 147 is the lease rent. But what is our actual cost of the asset? 20,80,000. For 20,80,000 asset value, how much is the lease rent? So 20,80,000 divided by 1,000 into 147, 3,05,760. 3,05,760 is the lease rental to be paid at the end of every year. First year and second year and third year and fourth year and fifth year. Now annual lease rental 3,05,760. From this to this you add sales tax, because it is given in the problem. Sales tax of 4% is also to be added to lease rental. The lease rentals are also subject to sales tax. So 4% of 3,05,760, 12,230 is the sales tax payable. So total will be 3,17,990. 3,17,990 is the annual lease rental payable. Now, annual lease rental payable 3,17,990. Now, tax benefit at the rate of 50%. Income Tax Act says the lease rental will be allowed as a deduction in computing the taxable income. So, while calculating the profit for income tax purpose, the income tax provision says lease rentals are also allowed as deduction. So by debiting the profit to profit and loss account, our income will get reduced. When income get reduced, we will save the tax. So that's the benefit. So 50% we are saving. We are paying 3,17,990 to the lessor, but we are getting the advantage in tax saving. How much? 1,58,995. 50% of this amount. So how much is the net annual lease rental payable? 1,58,995. So ultimately our net liability of payment of lease rental is 1,58,990. Now we'll calculate what is the present value. Present value of lease rental. So year 0, 1, 2, 3, 4. 0 I am taking because at the time of signing the agreement, lease management fee is payable. At 0 year, lease management fee is 20,800 is payable at the time of signing the agreement. 0 year. Then first year, second year, third year, fourth year, fifth year, every year 1,58,995 every year. Now this will be multiplied with PV factors. For 0 year, always PV factor should be taken 1. Already I told you in the previous video. 0 year means at the beginning. At the beginning, the PV factor should be taken as 1. Then first year 0.8621, 0.7432, already I told you we have taken here 0.8621, 0.7432, 16% PV factors we got. Multiply net lease rental with the PV factors. So 20,800 into 1 is 20,800. 1,58,995 into 0.8621, 137,070. Like that you multiply all net lease rental with PV factors we get. The PV of lease rental is 5,41,414. This is the total present value of lease rentals which are payable in 5 years. Now net advantage in leasing, or simply you can compare it. The present value of cash outflow in buying option is 12,79,430. If we buy the asset, then the total PV of cash outflow is 12,79,000. If we take the asset on leasing, it comes to 5,41,000. That means we are getting a huge advantage in taking the equipment on lease. The net advantage of leasing, PV of cash outflow in buying option minus PV of cash outflow in leasing option. In buying option, what is the PV of cash outflow? 12,79,430. Already we have calculated. Now PV of leasing option 5,41,440. Subtract 7,38,016. This is the net advantage on leasing. So we suggest the company, don't buy the equipment. Take the equipment on lease. That's all. So this is the end of problem number 15. Now see the 16th problem. Messrs GVK Industries requires an equipment costing rupees 7,50,000 including all taxes. So this company, GVK company, is in need of a machine, equipment whose cost is 7,50,000. It has a life of 5 years, after which it can be sold for 50,000, scrap value 50,000. Depreciation with tax shield applicable to the equipment is 40% on WDV method. So depreciation allowed 40% on WDV method. Messrs GVK Industries approaches SBI Leasing Company Limited. So this is the lessor. SBI Leasing Limited is the lessor. So this GVK company approached this lessor company SBI Leasing Limited for getting this machine on lease, for arranging a lease of the equipment. SBI Leasing Company Limited has a cost of capital 12% per annum. That means future cash flows will be discounted at 12% by the company and pay tax at 40%. Calculate the break-even lease rental that needs to be charged by SBI Leasing Company Limited. If it charges 1% of initial investment as lease management fee. Now we have to evaluate from lesser point of view. This SBI Leasing Company wants to find out what is the minimum lease rental to be charged from GVK company. So before entering into lease agreement, the lessee as well as lessor will evaluate the proposal. So here in our problem, SBI Leasing Company will evaluate that what is the minimum lease rental we should charge to the GVK company. And present value of annuity are 0.893, 0.797. All the present values are given, no need to refer the table. No need to refer the table, directly PV values are given in the problem. Now see carefully, we want to find out what is the minimum lease rental to be charged. GVK Industries Limited cost of equipment is 7,50,000. Less lease management fee 1% of 7,50,000. This SBI Leasing Company will charge 1% of the cost of the equipment as lease management fee. So 1% of 7,50,000, 7,500 will be deducted. The net cash outflow 7,42,500. So if this SBI Leasing Company enters into this contract, then SBI company has to incur a PV of cash outflow of rupees 7,42,500. Actually, for calculating the break-even lease rental, we have to equate the PV of cash outflow with PV of cash inflow. The present value of cash outflow already we got it 7,42,500. Suppose our company is SBI Leasing Company. We have to purchase the machine at rupees 7,50,000. But at the same time, we are getting lease management fee from the lessee at 1%. So this 7,500 we are getting and we are making the payment 7,50,000. The net cash outflow will be 7,42,500. This will be equated with present value of cash inflows. What are the cash inflows? First of all, depreciation shield, tax shield on depreciation. Every year, depreciation we can charge in profit and loss account, and we are getting a tax shield on depreciation. So we calculate annual depreciation according to WDV method, written down value method. Year 1, 2, 3, 4, 5, outstanding balance beginning of the year 7,50,000. The cost of the equipment is 7,50,000. 40% depreciation, 7,50,000 into 40%, 3 lakh debt. Deduct 750 minus 3 lakh, 4,50,000 outstanding WDV at the end of the year. The first year end of the year will become second year beginning. The first year closing WDV will become second year opening WDV. So this 4,50,000. Again 40% of 4,50,000, 1,80,000 is the depreciation. Deduct 450 minus 180, 270 is the closing WDV. This will become opening for the third year. So again 40% of 270, 1,08,000 minus kar do 1,62,000. This will become opening 1,62,000. 40% of 1,62,000, 64,800. Deduct it 97,200. 97,200 into 40%, 38,880 closing. So we need the depreciation, annual depreciation for first year, second year, all the years. Now we calculate what is the present value of tax shield on account of depreciation and the residual value. At the end of the fifth year, we can sell the machine and realize 50,000 rupees. We can get 50,000 rupees at the end of the fifth year. That is the cash inflow. Now first, year 1, 2, 3, 4, 5 and last scrap value also I have included here. That means we are getting the benefit, cash inflow on account of scrap value 50,000. So first year, depreciation 3 lakh, 1,80,000, all the depreciation for 5 years I have taken, and fifth year scrap value 50,000 we are getting. Now tax shield, the tax rate is 40%. So calculate 40% of 3 lakh, 1,20,000. 40% of 1,80,000, 72,000. 40% of 64,800, 25,920. So 40% we are calculating. But don't calculate 40% of 50,000. That 50,000 is not an expenditure. That's an income, inflow. Take 50,000, same amount. Now, PV factors. 12% PV of rupee 1. It is given in the problem. In the problem, it is specified. The PV factors at 12% for 1 year, 0.893. For second year, 0.797. Third year, 0.712. Multiply PV factors with tax shield. Tax shield with PV factors, you will get PV of tax shield. Multiply 50,000 into 0.567. We'll get total 2,48,955. This is the total of PV of tax shield, present value of tax shield. Now, let the annual minimum lease rental to be charged is X rupees. Suppose this SBI leasing company will charge to GVK Industries annual lease rental of X rupees. Now after tax we will remain, it will remain 0.6 because 40% is the tax. If we take X rupees from the lessee, 0.4x will go to the government in the form of tax. The remaining amount will be 0.6. So after tax lease rental will be 0.6, 60% of X. PV of present value of total lease rental. Present value of total lease rental. Annual lease rental 0.6x annual into PV of annuity factor at 12% for 5 years. So to calculate annuity, you simply add up 1, 2, 3, 4, 5. These 5 values if you add up, then you will get 3.605. This is the annuity factor. Otherwise you refer the table. So multiply 0.6 into 3.605, 2.163x. 2.163x is the present value of annual lease rental in 5 years. Now total of PV of cash inflow. PV of cash inflow total. First of all, we are getting 2,48,955 plus 2.163x. This is the present value of lease rental and this is the present value of tax shield on account of depreciation and residual value. So this is the cash inflow. and PV of cash outflow is 7,42,500. Now equating both PV of cash inflow and PV of cash outflow, we can get the minimum lease rental. So 2.163x plus 2,48,955 is equal to 7,42,500. Now bring this 2,48,955 to RHS, so it will become minus. So 2.163x is equal to 4,93,540. X is equal to 4,93,545 divided by 2.163, 2,28,176. The minimum lease rental is 2,28,176. SBI leasing company should charge a minimum of 2,28,176. At this point, no profit, no loss. Break even lease rental. Break even lease rental means inflow and outflow both are equal. So SBI leasing company should charge a lease rental which should be above this amount. This is the minimum. Below this, it should not charge. If it charges below this, it will incur loss. That's all. This is the explanation about 16th problem. Now the last and final problem, 17th one. 17th problem is the last problem on lease accounting. See carefully. Messrs Pankaj Leasing and Finance Company Limited has been approached by Messrs Kailash Industries to write a lease for an equipment costing 10 lakh. So Pankaj Leasing Company is the lessor. It has been approached by Messrs Kailash Industries, this is the lessee, to write a lease for an equipment of 10 lakh. The following information is available. The equipment is depreciated at 20% per annum on straight line method. Straight line method means fixed installment. So 10 lakh into 20%, 2 lakh rupees is the annual depreciation fixed. There is no salvage value at the end of 5 years, no salvage. The lessor is entitled to a lease management fee of 1% on asset value. The lessor will charge 1% as lease management fee from the lessee. So 1% of 10 lakhs, 10,000 rupees, the lessor will charge from the lessee as lease management fee. And the cost of capital of lessor is 12%. The future cash inflows will be discounted by a PV factor of 12%. And its effective tax rate 40%. The lessor needs to incur legal cost of 5,000 rupees at the beginning of first year. It also needs to incur administration overhead of 10,000 per annum in relation to the lease. The lessor has to incur legal cost of rupees 5,000 at the beginning, at the time of signing the agreement. And also every year 10,000 rupees per annum, every year as administration cost. Messrs Kailash Industries has offered to pay an annual lease rental of 360 rupees per 1,000 for 5 years. So this lessee has given the offer that they will take the asset on lease at a lease rental of 360 rupees for every 1,000. So we have to calculate. For 1,000 rupees asset value, 360 rupees is the lease rental. For 10 lakh rupees asset value, how much would be the lease rental? So 10 lakh divided by 1,000 into 360, you will get 3,60,000. That means the lessee has agreed to pay a lease rental of 3,60,000 every year. The lessor requires a security deposit of 1 lakh rupees at the time of signing the lease agreement, which is refundable at the end of the 5th year. One more thing. The lessor has asked the lessee to pay security deposit of 1 lakh rupees. At the time of signing the deal, 1 lakh rupees should be paid by lessee to the lessor. And this 1 lakh rupees will be refundable at the end of 5 years. Evaluate the proposal from the lessor's point of view. Whether lessor should enter into this agreement or not, that we have to find out. So we will calculate what is the present value of cash inflow and what is the present value of cash outflow to the lessor. And we calculate NPV. So first of all, for every 1,000 asset value, 360 rupees is the lease rental. This is the offer given by the lessee. The lessee has given the offer. So for 10 lakh rupees asset value, how much? So 10 lakh divided by 1,000 to 360, 3,60,000 is the annual lease rental, which is agreed by the lessee. Now depreciation 20% of 10 lakh, 2 lakh rupees fixed. Lease management fee 1% of 10 lakh, 10,000. Basic calculations over. Now annual cash inflow. So if this lessor has agreed to this deal, then annually how much cash inflow it will get? Lease rental it will get 3,60,000, just now we have calculated. From lease rent he will deduct the expenditure. The expenditure are administration cost every year 10,000. Depreciation every year 2 lakh. So 10,000 plus 2 lakh, 2 lakh 10,000 will be deducted. So 360 minus 210, 1 lakh 50,000 is the profit before tax. Profit before tax. Deduct tax at the rate of 40%, 60,000 tax. So 90,000 is the PAT. Profit after tax, 90,000. Depreciation, add back, because we require cash inflows. So cash inflow is PAT plus depreciation. Profit after tax plus depreciation, you will get cash inflow. So 90 plus 2 lakh, 2 lakh 90,000 is the annual cash inflow. Annual cash inflow the lessor will get every year. For how many years? 5 years. Now one-time cash inflow that are tax deductible. At the time of signing the agreement, the lessor is charging 10,000 rupees as lease management fee. Lease management fee 10,000 rupees lessor is charging from the lessee, and lessor is incurring legal expenses of rupees 5,000. So here lease management fee 10,000 less legal expenses 5,000 rupees paid by the lessor. So remaining amount 5,000. This 5,000 rupees is taxable. So 40% will go tax. So 40% of 5,000, 2,000 rupees will go as tax. So 3,000 rupees. So one-time cash inflow at the time of signing the agreement, 3,000 rupees cash inflow after tax the lessor will get. Now initial cash outflow. The lessor will make initial cash outflow of 10 lakh rupees. But at the same time, 1 lakh rupees security deposit it is collecting from the lessee. The net cash outflow will be 9 lakh. Net cash outflow is 9 lakh. So net cash outflow is 9 lakh rupees minus one-time net cash inflow. At the time of signing the agreement, 3,000 rupees he is getting after tax. After tax, 3,000 rupees it is getting. So that will be deducted from cash outflow. Deducted from cash outflow. So 8,97,000 is the net cash outflow. Net cash outflow to the lessor. To the lessor. Now PV of cash outflow at the end of 5th year. At the end of the 5th year, 1 lakh rupees security deposit has to be refunded. 1 lakh rupees security deposit has to be returned back to the lessee. So what is the present value of this 1 lakh rupees? So PV of cash outflow at the end of the 5th year, 1 lakh into PV factor 12% 5th year. 12% 5th year, already we know it. What is the PV factors? PV factors are given in the problem, or else you refer the table. 12% 5th year, the PV factor is 0.5674. Multiply 56,740. 56,740 is the present value of 1 lakh rupees, which is refundable at the end of the 5th year. Now, total PV of cash outflow. Total present value of cash outflow. So cash outflow 8,97,000 plus 56,740. It is 9,53,740. 9,53,740 is the present value of cash outflow. Now present value of cash inflow. Every year how much cash inflow we are getting? 2,90,000. Every year the value of cash inflow we are getting 2,90,000. This will be multiplied by PV of annuity factor 12% 5 years. So PV of annuity factor 12% 5 years 3.6048. Refer the table or by using calculator. Add up 5 years PV factors. You will get 3.6048. So multiply 10,45,392. The present value of cash inflows 10,45,392. The present value of cash outflows is 9,53,740. So NPV, net present value. total of PV of cash inflow 10 lakh 45 392 minus PV of cash outflow 9 lakh 53 740. Deduct NPV 91,652. The NPV, net present value, is 91,652. That's positive NPV. So this proposal is a profitable proposal from the point of view of the lessor, from the point of view of leasing company. The leasing company, if it enters into this contract, they will get a NPV of 91,652. That's it. Totally 17 problems I have explained on lease accounting. Remember, the chapter is little bit difficult. Earlier this chapter was there in PG courses, in CA, in MCOM, in MBA, but right now it is included even in bachelor's degree also in BBA and BCom. So this chapter requires a little bit effort, more effort in understanding. It may not be able to understand in the first attempt itself. So students must have the patience to watch the video, not once, twice, thrice. Then only you can be able to get the command of this. Many comments I am getting, students particularly at this present era, the students want shortcut method. The student want to understand very quickly. It is not difficult. You have to work hard. If you want the complete command. From knowledge point of view, if you are watching this video, then definitely you can gain a lot. Otherwise, if your objective is simply to pass the examination, it will be difficult to understand this. So I hope students are getting my point. So I am doing my maximum in explaining it. So keep watching. If you like this channel, give a like to the videos and share my channel in your group, in your friend circle, so that more students can watch these videos and get the good knowledge, command on the subjects. And lastly, don't forget to subscribe to my channel. We'll continue with a new topic in a new subject in the coming videos. So keep watching. Have a good time. Take care.